Hello and welcome to a special edition of Listen Up Landlords in front of a live audience in the MediaCity Digital Performance Lab in Salford. My name is Richard Blanco. It's great to be here, and of course I'm joined by my lovely co-host Ben Beadle. We have three chunky topics in store for you today. We'll be debating the government's consultation on minimum energy efficiency standards. If proposals for a minimum of EPC C by 2030 are confirmed, an estimated 2.5 million privately rented properties will need to be retrofitted. Landlords face a contribution of up to £15,000 per property. We'll be asking NRLA's James Kent and Anna Moore from Domina Homes for their opinions and advice. Are you a landlord or developer keen to invest? There are many hotspots and redevelopment areas dotted around the UK. We'll be gazing into our crystal ball to see where the market is heading and debating some of the challenges and opportunities facing developers and investors in the current climate. But first, it's the biggest legislative change in the private rented sector since the inception of assured short-hold tenancies in 1989. Yes, the Renters' Rights Bill will introduce ongoing periodic tenancies and bring forward changes around arrears, rent increases, student lets and ending tenancies, plus a mandatory redress scheme, the PRS database and changes to enforcement around housing standards. The bill goes to the committee stage in the House of Lords on the 22nd of April. Ben, obviously the last government attempted to bring in a renters reform bill. Many would say that the current bill is somewhat less palatable for the landlord community than its previous incarnation. What do you think?
Well, I think many would be very right, Richard. I think landlords have got grave concerns over the bill as it stands. For those of them that thought the Renters Reform Bill was a dog's dinner, they haven't seen anything compared to this one. And I think that this is why we're working so hard to get amendments through, because as it stands, I think that the sector is going through a huge amount of uncertainty, not just because of renters' rights. We're going to come on to MEES and other things at the moment, but the changes around student lets, the abolition of Section 21 is going to cause people to radically review the way they manage their properties. And I think that unless landlords have confidence around how this is going to play out, you chuck in MEES on top and people will be rethinking their strategies and portfolios. And with a dozen people chasing every available home, that's a problem.
Yeah, I mean, it does seem to me that some aspects of the bill are sensible. So say, for example, around pets, the fact that tenants will be able to take out pet damage insurance, which will make landlords more comfortable having pets potentially. Say around Section 13, though, and the fact that it's much more likely that tenants will want to go to tribunal. Some bits of the bill like that seem to be quite daft.
They do, and going back to the bit about pets, actually, had government not tinkered with deposit caps in the first place, actually maybe the issue of pets wouldn't needed to have been addressed. If I was being in a very contentious mood, which happily I'm not.
Do you think there are some sensible things in there, though, Ben?
Do I think there's some sensible things in there?
You think there's daft things in there,
I think there's a lot of daft things in the Renters' Rights Bill, but I understand why these things are being brought forward. And I think what we have to do is to recognise that the system is going to change, whether we like it or not. What we also have to do is to recommend some proposals that are going to, I guess, land better with our landlord audience. And that is around, robust grounds for repossession. It is around court reform. It is about protecting the student market. And it is making sure that responsible landlords can still operate and provide homes and have confidence to do so. And so those are some of the things that we're certainly working on to make sure.
If you were to pick out like one thing that is most concerning for landlords, what do you think it would be?
Well, we only have a limited amount of time on this podcast, Richard. But I pick out two things, really. One is around the whole student market. I don't think that that's a broken market, but I think it runs the risk of being broken by some of these changes. The second thing I have grave concerns about is that the minister has said that in abolishing Section 21, landlords must have appropriate grounds to be able to rely on to get possession of their properties. We agree with that. But how is it right that we move the threshold for serious arrears from 2 months to 3 months and then decide that doubling the notice from 14 days to 28 days is a good thing? So you're 4 months down before you can take any action whatsoever. That doesn't strike me as, a fair and reasonable proposition.
Yes, well, let's bring in our guest now, Carly Jermyn, who is a solicitor and CEO of Woodstock Legal Services, and William Reeve, CEO of the lettings industry software platform Goodlord. Thanks very much for joining us. Let me start by asking you, first of all, Carly. Section 21 will, of course, be gone, as we know.
Yeah.
Do you think the move-in and sell provisions, which are obviously 4 months' notice and it's a year into the tenancy, are sufficient to allay landlords' fears about getting back possession of their property if they need to?
Those two in itself, no, I don't think they are. I think, and I'm not sad as a lawyer to see the back of a Section 21 notice and accelerated possession procedure claim, but I think Ben's talked already about the fact that extending the notice period for rent arrears, I think that is a concern. And it wouldn't be if the court system worked, but it doesn't. So, they're already getting a huge head start there. And then my biggest concern is, because people have used Section 21 where they've wanted to move back in and sell, that mechanism's been used and that's what they were, regularly using it for. What they were also using it for is antisocial behaviour. And that's one of my biggest concerns about these changes is how do you deal with antisocial tenants? Because actually, yes, you'll be relying on proving antisocial behaviour at court. Yes, they're taking away the notice period, but you've still got to prove antisocial behaviour in a very short space of time in front of a judge. That means you've got to go and get witness statement evidence, documentation, to support your claim. Witnesses aren't always very willing to come forward and support a claim against their neighbours for antisocial behaviour for obvious reasons. So, yes, of course, the moving back and selling that was all reasons people use Section 21. So, that, they put those in there. That makes complete sense. I understand why they put the restricted periods in there because otherwise it would just been a backdoor mechanism to deal with other issues. So there had to be some protections in there. I'd like to see those periods shortened. But yeah, antisocial behaviour and extending the notice periods for rent arrears is my biggest concern.
I mean, hunting around for things that we might see as reasonable or sensible, again, William, measures like the ban on upfront rent, bidding wars, and as I've already mentioned, the right to request to have a pet, some would say seem reasonable. What are the concerns?
Well, I mean, again, to Ben's point, where do you start really? But I mean, one of the ones I think where unintended consequences will be most rife is on the bidding prohibition, the bidding war prohibition. So you won't be allowed to accept a rent that's higher than the advertised rent, and it doesn't take a genius to work out what's going to happen there. The advertised rents are going to skyrocket. And so I think, and we've just seen, it's April the 1st today, we've just seen, in what I don't think is an April Fool, all the news about bills increasing. I was wincing earlier, the coffee in my central London place is now costing over £5. Like, is this really what we've come to? But we haven't seen anything yet because rents are going to be headline news here.
Wow. And what about the ban on upfront rent? Do you have any thoughts on that?
Yeah, I mean, that's another one of these situations which you can just about understand, I suppose, some sort of do-gooding mindset that gets you to that, but it's just going to have terrible effects. And the market has kind of got to very sensible solutions for some slightly marginal cases. So tenants who can't easily establish proof of income, can't easily establish that they can afford the rent of the property, usually some form of upfront payment is a good way of clearing the decks for that, especially, for example, foreign students who haven't got sort of credentials in the UK system, if you like. They'll often have the means and be very comfortable to pay upfront, and often it's more convenient for them. And the market has kind of been working that way around for years now, and that will become illegal. And it's actually a bit more than that, Richard, because the whole sequence of how you set up a tenancy and when things can be signed and when money can be collected is going to change, and it's going to catch people really unawares.
Yeah. And of course, that is one of the big concerns, isn't it, with the bill as it stands, which is, as it stands, you sign a contract and then you have to collect the funds, and you're hopeful that those funds are going to be paid.
Well, that's what's coming in with the bill.
Indeed.
So the current arrangement where you generally, and we do a lot of these obviously, but you'd get to a situation where everything's ready to go, and then you give the documents for signing to the landlord, and you give the documents for signing to the tenants, and say at the same time you should cop up the move-in monies, and those two parties go and do their respective things. In the new world, that process won't work, because you're not allowed to collect any money from the tenant until the landlord's signature's been on the documents. So you're going to have some sequence, and landlords, best will in the world, are not always the most
What are you saying? What are you saying?
Not always the easiest people to sort of sequence. They're busy
Yes.
people, and and getting them to sign something kind of to a schedule is going to be quite an ask, actually.
I think some are hoping there's been a drafting error here and it will be resolved, but who knows?
Well, we are seeing amendments being put through, aren't we? I think it's...
We haven't seen them on that yet.
Well, maybe I'm about to speak out of turn, but I understand that there will be
Okay.
an amendment in relation to that, and
That would be
that's
welcome.
that is one of the things that will be welcome. But I think there will be a lot of landlords out there, William, that see that as, you know, it would be a very small victory in the grand scheme of things.
Agreed.
But actually, it's going to be a very, very significant win if it does actually come to fruition.
Well, and it's exactly as you were mentioning, Ben, if it doesn't get amended, then actually, at the point that the document's signed, you owe the tenant legal possession, occupation.
Yes,
And they owe you the money, but they don't have to have paid it.
indeed.
And that's going to be quite a shock for people. So you've got to give them the keys, and they might say, well, I'll tell you what, I'm going to give you the money next week.
And then we'll be having lots of unlawful eviction claims, which
Well-
is always fun.
But keep you busy, won't it? It'll keep good for business, if nothing else. And Carly, maybe I can just turn to you. One of the other elements to the bill is around the PRS database.
Yeah.
Compliance, good practice, all on one platform.
Yeah.
There's a lot to kind of like there,
Yeah.
I guess. But one of the things that we've been pushing for previously is that should dovetail more appropriately with discretionary licensing. How do you see these things playing out?
My understanding that it's not going to replace it, is it?
Indeed.
So and I think I like the idea of the database because it's neat and it's tidy, and we will still have to do all of the checks that we do prior to serving a Section 21 to be able to serve a Section 8 notice. And wouldn't it be great if everybody did comply and that was neat and tidy? And you've talked about process and how important it is because it's a minefield, and so. As a lawyer, we love systems and processes for us. So I like the idea of the database if it all works really nicely. And in theory, it should be driving up standards, and good landlords, are there and they're putting all of their data on there. It's all there. It's neat and tidy. You're protected. You're happy. You've done your bit. Will it work like that in practice? I don't know. And we'll all be figuring it out together, won't we? So.
Well, can I just jump in on that? Because one of the basic things, I've got a computer geek background, so I do sort of forgive me a little bit. But one of the things that makes databases neat and tidy is having a reference number to associate your records with. So think Companies House, for example, which has got every limited company in the UK on it. And now imagine Companies House without company numbers. And that's what's being proposed here.
Yes, quite.
Actually, the UK does have unique numbers for properties. Again, most of us don't realise that. I certainly don't know what the UPRN, as it's called, for my property or my the let properties I have are. No idea. But I know that they exist, and I could find them. And they're missing real trick here because they're not planning to use the unique property reference number in the property database.
And of course, this is not a new thing, is it? Our friend and regular contributor Kate Faulkner has waxed lyrical about URPNs for a many number of years, and it is the type of innovation that seems like common sense to me.
Again, it's one of those things you don't quite realise how important it is until you imagine something like Companies House. Imagine like driving licenses without unique numbers on them. It's just, and then imagine the potential for fraud.
Yeah.
And so there's actually they're close to something which could be very neat and tidy, and it's not going neat and tidy. That's our concern.
And just one other point to pick on, William. A key issue in the PRS at the moment is obviously a lack of supply. You're dealing with a lot of agents and landlords with Goodlord. What impact do you think the Renters' Rights Bill might have on that sentiment?
Well, sentiment's been in the rock bottom for years now. You guys, have been capturing it better than anybody. But at the same time, for all the sort of headline news about landlords leaving the sector in droves, the reality is the sector's growing.
Yes.
The number of unique landlords, if I can bring that word in again, may well be shrinking because certainly it does seem as if some of the accidental landlords are taking the opportunity to leave, and they're generally often being bought out by more professional landlords. But I think that the sentiment hitting landlords here is just the bad's going to get worse basically. And again, it's not as if when they're selling up that's going to be going in favour of owner occupiers, right?
No.
The first-time buyers numbers are not growing, so at some level or other, the sort of market's got to clear. But it's still doom and gloom for a long time yet, I think, we fear.
Carly, the House of Lords committee stage begins on the 22nd of April.
Yes.
And the NRLA is proposing that the Valuation Office Agency could provide a service that assesses rent increases before they go to tribunal. That would be the Section 13 process that's being proposed. What do you think?
I mean, the concern about that process is if you're a clued-up tenant, why would you not ever challenge it? My advice to landlords with all of this change is that everything you do when you serve a notice, you can't just serve a notice. You need to show that you've done your homework and that when you serve that notice, you give them the evidence so that you deter any tenant from challenging. You think, oh, they've done their homework, there's no point. But actually, why wouldn't you as a tenant? So that, I think, would be really helpful.
I think we're all worried that, we propose rent increases with Section 13 notices under the new system. The tenant will go straight to the tribunal.
Yep.
The tribunal will get clogged up. It will take 2 years to get there.
And they won't backdate.
And the rent increase won't be backdated.
Yeah.
So do you think some sort of system like using the Valuation Office Agency could help?
It could help, but ultimately, unless that influences their decision and they can backdate, or you have more people that can, do the tribunals essentially, and you're training people up to do those to, deal with demand. No, I don't think it will, because they're not going to backdate that decision.
But ministers are very keen on this part of the bill, aren't they? They want to see more tenants challenging rent,
Yes.
so it seems like it's something we're going to be stuck with.
Yeah, and it is incredibly frustrating. But I think, you've talked about the fact with the bidding wars, is that not just going to put rent up, and actually as a landlord going to go, well, if I'm potentially going to have to wait 2 years to put my rent up again, and next time, if that's how slow the tribunals are, I'll go higher again. So they're all just pushing it forward to buy yourself time.
And I know a lot of landlords are actually putting rents up now ahead of the changes. So yes,
Yeah.
Talking about the changes, of course, we don't know when they're going to come in. William, when do you think the new system might come in, and how should landlords prepare?
I think that the abolition of Section 21 is going to be first out of the gate. But some of these changes around, for example, the sequencing of payments versus signatures, there may be a little bit more of a run-in time. I think the Minister has acknowledged that change takes time and that there are a lot of sort of different moving parts that need time to adjust. So, but they're also very clear that when they say no-fault evictions are abolished, they're abolished.
Right, yes.
And Carly, you mentioned about capacity of the first tier tribunal. It's obviously the same in the county courts. We see reform of that as being absolutely essential to the system working, but the government is quite relaxed about it.
It was essential 10, 15 years ago. It's, so it was needed then, So to deal with this, I don't know if anyone's stepped into a court lately, but it feels like you go back in time, and it's just beyond frustrating. You used to be able to go to a court, issue a claim. Yes. Now we send it off, and you wait. And you hope that they issue it, and you hope they issue it before the shelf life of the Section 21 expires. And we used to be able to say, look, here's our proof, we post it. They don't care now. So, I would be saying to people, just understand how slow the courts are and protect yourself. Do things much earlier, don't wait.
But if you look at government statistics, that they don't seem to ring true compared to
our experience.
Actual experience.
Yeah.
Why is that?
Who knows? And, what we're seeing is we see, I feel awful seeing all these horror stories, but we see files lost between courts. It's just so old-fashioned. And then where we are with tech and how the courts are operating, are they even able to provide those stats confidently? Are they just, is it a finger in the air job? I don't know. But, the courts are incredibly frustrating. They're not making use of tech, and, that is a big concern. And it's not just the court systems and processes, it's the judges. And as a trained lawyer, you never speak ill of a judge. But
we'll edit it out. Don't
worry. Please do. But sometimes they're hearing a family case, then they're hearing a housing case, and actually now they're going to be grappling with new law. And I've stood before a judge, with the existing law. It's been in place for a very long time, and they don't know it. And I'm having to, respect a judge that respectfully isn't up to speed. And we're going to have that, and they're all going to be grappling with it. And what you'll see as well is, yes, we'll have the legislation, and we'll have the regs, but what we'll see is satellite litigation, which will, I'm sure there'll be some very interesting stuff going on. But what we also see where we do work all around the country is how the county court judges are all starting to deal with the lead and find their feet with it, and what will happen in this court. And, particularly very pro-landlord judges, which there are more pro-landlord judges than other areas. We're very lucky in Bournemouth. I think they're quite balanced, and it's quite, they process claims, very efficiently, relatively. But you'll see, very difficult judges making difficult decisions, and, gets around on the circuit. We start to see how they're dealing with it. We then have to take a really risk-adverse approach and make sure our landlords understand that even though the law says this, at the moment we're seeing these trends, so you need to really protect yourself.
And William, Matthew Pennycook says he takes landlords selling up with a pinch of salt. And it says here, why is the government so relaxed about supply? I would say, why is the government so complacent about supply?
Yeah, well, I agree, and that the lack of housing is the underlying root cause here, and they're seem to be doing everything they're fixing everything else without actually addressing the root cause.
So you see 1.5 million homes within touching distance. Touching distance.
I'm within touching distance of losing a lot of weight as well, Ben. But I'm afraid it's still some way to go.
But why do we have this? Why are they picking a fight with people that are providing homes whilst having no real alternative plan?
I think we all shake our heads a bit at this, don't we? But I think one thing people miss is that there are almost 3 million landlords in this country, and I think people think tenants vote and landlords don't somehow. And I think that's a misconceived. All the votes are in the bag, and they don't need to worry about them. But I think that ultimately all markets are two-sided, aren't they? You need both sides of the market to function correctly, and I just don't think the minister wants to hear that.
Yeah, quite. Well, we shall remind him when we see him next. But we've had some advanced questions submitted for this podcast, and one of the ones I always get asked, like I asked it yesterday in where was I, Liverpool. Why aren't landlords fighting to keep Section 21? Why aren't we doing enough?
It's a tricky one, isn't it? I mean, the press around Section 21, on the face of it, even as somebody who acts for landlords, I've been a landlord myself, on the face of it, when you call it a no-fault eviction and it's only 2 months and someone's got to leave their home, that sounds terrible. But the reality is...
want to be on the receiving end of that, would you?
I wouldn't. In particular, you've got 3 children. How do you suddenly... And I'm in a rental at the moment. The shoe is on the other foot at the moment. This is all very interesting. But, to go and find another property is incredibly difficult. It's not easy. So I get that. But the problem is, we've just talked about court reform and the actual process to get possession. If everybody just left after the Section 21 and they're all, terribly scared by the end of that notice period and they all left, and then everybody was turning up at the local authority's door to get rehoused, that would be a huge problem. But the reality is, most people know they've got the court's time to play with. And we talked about things like antisocial behaviour and all of that. So it was almost a blunt instrument to deal with other things. So it did a job in the situation we're in with how the courts operated, etc. So...
Well, Dad, I'm not your landlord. That's all I'm going to say.
I know.
You think that landlords have just accepted there's a political consensus against Section 21, so there's no point in fighting for it?
I think so. Yeah, I think so. And the noise is so loud around it, isn't it? And we do, it's like when you go to a court hearing, what you are asking the judge to do is make somebody homeless. So I get that, but because there's nowhere else for them to go. But you're asking landlords to do the job of the local authority, really, is what we're all doing here. So, I just think the noise around with it, on the face of it, it feels, incredibly unfair. But if the systems were better, it wouldn't be. Yeah.
Yeah, the thing I struggle with is I accept that, and both the sort of salience of the no-fault eviction point, but it was in Theresa May's manifesto, it was in Johnson's manifesto, and it was then in the Labour manifesto. So the no-fault evictions has been bipartisan as an issue. But the thing that wasn't in either party's manifesto was the abolishing fixed-term tenancies. And the research we've done says twice as many tenants prefer that as not. And I feel like I don't see where that's come from. That's going to be much more disruptive, especially to the student side of the market, and I think people realise. And I don't see the political kind of will where that has come from. Really.
It sort of came from nowhere, isn't it? Really, yes, exactly. Yeah. One other question on the issue of supply: with Rachel Reeves imposing $4 billion cutbacks in her spending review, have we given up on campaigning for Section 24 taxation to be changed or repealed? What do you think, William? Do you think it's just forget it because there's too many cuts happening?
I mean, we talk about this a bit internally, and when my team are sort of trying to help the landlords and trying to come up with talking points and things about and one of those is always like, let's ask for tax reliefs or whatever. I'm always kind of like, come on guys, you've got to be realistic. And anybody who says, can we have a tax relief or can we have more spending. I think, we're not the one trying to make the overall decisions, and unless you're putting in, I think, unless you're sort of making a suggestion about where the money's coming from or what you would do differently, I think you've got to be respectful that the public purse is very limited at the moment. There are a lot of pressures on it, and I think that the tax reliefs that have gone, I think, aren't going to come back anytime soon.
Okay, Carly Jermyn and William Reeve, thank you very much for joining us.
Thank you.
Thank you.
Richard. Thank you, Ben.
You're listening to a special edition of Listen Up Landlords with Ben Beadle and Richard Blanco in front of a live audience at the MediaCity Digital Performance Lab in Salford.
The government is consulting on minimum energy efficiency standards in the private rented sector until the 2nd of May. Key proposals are that only properties that are EPC C or above can be rented from 2030, and that landlords will have to contribute £15,000 per property. Here to discuss the proposals, James Kent, Chief Innovation Officer at the NRLA, and Anna Moore, CEO of Domler Homes. I'll start with you, Anna, if I may. I mean, is this a pipe dream, the timings that have been set out? Are we really going to be able to get 2.5 million properties upgraded by 2030?
Yeah.
Discuss.
Absolutely. And I will start by saying a few years ago, when EPCC minimum was first floated by the previous government, Shawbrook Bank, who are a big buy-to-let lender, estimated 80% of the landlords that they had polled in their mortgage lending book were ready for higher MEs, right? So people had set aside a bit of money, had been in touch with an installer. So I think the sector wants to comply. Of course, 4 or 5 year timeline feels quite short. What we're actually talking about in terms of upgrades, though, can be as short as half a day to a couple of weeks, right? If we're doing cavity and loft insulation top up, if we're talking about solar panel installations, these are pretty quick, cost-effective measures. I think the sticking point, and we'll probably talk about this, is do we have the capacity in the supply chain to absorb that? And that's where we might become a bit unstuck.
Because we've got stats from Kingfisher who say that we're about 250,000 sort of trades short of being able to do what we need.
And Construction Innovation Council says 500,000
Really?
tradies
Right.
short. Yep.
So how are we actually going to do it? We're going to need longer, surely.
In practice, we're going to need longer, or we're going to pay more. And so the advice we give landlords is get ahead of this while you still have grant funding that's available. There's about £1 billion that gets spent through the energy company obligation on retrofit grant funding. A lot of that can go towards the private rental sector. Government has just rolled out the Warm Homes Local Grant Program that gives up to £15,000 per property. PRS units are eligible for that. So there's a lot of carrot at the minute. Government is probably going to bring in the stick, right? And so try to get ahead of it, because costs will spike given that supply constraint, as you say.
And of course, we've got the £15,000 cap that's muted in the consultation. So it's one thing to kind of advise landlords to get ahead of the game now, but there is going to come a time where landlords are going to have to stump up some serious cash. Do we think that's fair? Is it fair to have that burden on landlords with everything else that they have going on?
And I think government haven't been clear yet about whether grant money can count towards that cap. I don't see any reason why it shouldn't, right? We allow landlords today to claim grant funding appropriately. We allow owner-occupiers, in our view, it should go towards that cap. What I think is unfair in that blanket number is the costs are so different property by property. You take the same 2 up, 2 down, 90 meter squared semi-detached house. One of these is a cavity wall, not in a conservation area. One of these is a solid wall in a conservation area. Property one, you're probably going to spend £5,000 to £7,000 hitting EPCC. Feels reasonable, right? You're probably going to get that back in valuation improvement over time, happier tenants who renew, less damp and mold risk, fab. Property number 2 is going to spend at least £20,000. And if your Victorian terraced house that's listed, good luck to you, that's going to be 40 grand before you know what you're doing.
Yep.
And so a blanket cap that doesn't take into account the specificity of each property and that kind of relative burden is a bit unfair.
James, what's the word on the street? How are landlords reacting to these proposals?
I'm a bit more of a Debbie Downer, actually. I think you're the expert. I'm just a guy with an opinion, but I do think that it's a bit of a disaster I do think that, you know, if you look at all the things we're talking about in the Renters' Rights Bill, this and the MEES regulations coming in can be one of the biggest financial implications for landlords. So they're naturally worried. And as you touched on, Anna, it's not having a one size fits all cap for a flat in London, a 2-bedroom flat, or even a 3-bedroom house in London to up north. It just isn't fair. So, you know, the landlords, nobody's against these efficient. Everybody wants warmer homes and a greener future, but they have to be fair. You know, they have to be. The rules have to be set clear. They have to clarify these rules, and people will step up. I'm sure of it.
Well, you mentioned clarifying the rules. Of course, the regulations won't be confirmed until late 2026, and this is casting a huge cloud of uncertainty over the sector. What do you think about that? I mean, why are we being sort of held up until 2026? Surely that's just far too late.
Well, it is too late. If you look at, they're saying that for new tenancies, it'll be 2028 for the regs to come in. So if we found out what the end of 2026, if my maths is correct, it would be 18 months time to try and get the work done. And, you know, as you touched on, the labour, it's not an 18 months task. It's a 5-year job. You know, you need to have the time to do it.
But the thing that really gets landlords, I think, is, and maybe a question for Anna on this one, the EPC methodology. And you know, we know that is proposed to change. But the event I was at yesterday, I had all sorts of, you know, conundrums. You know, should I do things now? Should I wait? Will this count? Will it not count? What's your advice to landlords around getting EPCs done now before the change?
Yeah. If you are at an EPCC today, because you'll be grandfathered in and that 10-year expiry date will be honored, right? You should get it renewed now.
Yep.
If you think you're on the border of an EPCC, so you've got an EPCD or thereabouts, it's probably also worth investing a little bit of money now, taking advantage of existing grant funding programs to tip yourself into that EPCC. So we're probably talking about spending a couple grand. You can probably get some of it back through grant. You know, that's a worthwhile investment, and then you've got 10 years of valid EPCC on your property. I think it's a lot harder for people who are staring down the barrel of bigger retrofit programs, EPC, EFG. Now, we do expect that government might honor investment that's made sooner than 2026, but that isn't clear yet, right? And so people are left a little bit in the dark there. And just on this topic of EPCs, right? You know as well as I do, horrible problems in EPC methodology, data collection, et cetera. 62% of EPCs have some kind of data quality issue. And we systematically overestimate actual energy use. And we're consistently wrong in where we categorize it. So about 15% of EPCDs should be Cs. About 19% of Cs should be Ds, right? So there's no rhyme or reason. Why is that? Because it takes 3 days to get accredited as a domestic energy assessor, and you pay £50 for an EPCC, right? And so what we need to see is people working to PAS 2035 standard. We're required to do that by law in the social housing sector. You've got to train up for 3 to 6 months to become a level 4 retrofit assessor. You've got to look at damp and mold, incredibly important if you're going to be doing any kind of insulation or fabric interventions into that house. You work to a higher quality standard, and you're confident you've got a qualified technician. So what I would say to anybody who's looking at doing work, get a PAS 2035 retrofit assessment, not a bog standard EPC, because you'll simply get better, more accurate advice.
Sound advice. I'm going to rush out straight away and get all of my Ds inspected. That's for sure. Anna, one of the challenging areas is probably given the age of the stock in the UK, a lot of pre-1919 accommodation, and solid wall insulation is likely to be the main measure there. But it could easily cost a lot more than £15,000. Are there some other suggestions, any alternatives to that?
Yeah, so as a business, we work on about 15,000 homes a year today across the UK, and we hardly ever specify solid wall, and that's because the costs are so prohibitive, right? That's
That's really a
materials.
last resort, isn't it?
Very much so, right? Because either you're putting it on the interior of the property and then you're losing a few inches of floor space, you reduce the value of your unit, why do you want that?
Yep.
Or you're putting it on the outside, you've got scaffolding cost, you're also worried about thermal bridging, damp and mold risk, da-da-da.
It's a bit ugly as well, isn't it?
And it's ugly, right? So on your period properties, you're also never gonna get that thing through planning. So we tend to actually go straight to solar where we can. So if you've got a flat roof or a parapet, you're gonna get a tighter payback period, 4 to 7 years on the bills. Great. You can also flow that through to the rent that you're charging tenants. If you think that on average, a tenant will save £671 a year from EPC D to C shift, up to £2,000 a year for properties at the lowest EPC bands, it's the 13th month of rent, right? And so we should be seeing landlords able to monetize some of the investment they're putting into their property and monetize some of that increased comfort they're providing for their tenants.
Just to add to that as well, these properties that we're talking about, obviously the older properties are made to be drafty. They're made to have that ventilation. You start putting warm, insulation and making it as efficient as possible. What's it going to do? It's going to sweat, and that property is sweat. It's going to get mold, and we're going to be in an even more problem. So.
Absolutely, James. Yeah, and a lot of landlords, I suspect, will have one eye on the exemption register and be thinking, and sadly, obviously, we all want energy efficiency improvements in the housing stock, but £15,000 is lots of money. Actually, solid wall insulation is probably going to cost more than that. Maybe they could just go straight onto the exemption register, and there's this high cost exemption criteria. Will that still be working as it works now, or do you think it's realistic for landlords to want to do that?
Yeah, I mean, as the exemption stands, I think it's from April, you can go online and you can apply for an exemption. If the rules where it stands right at the moment, if you were to spend your cap, so you spend your £15,000, you can then apply for an exemption. You just need evidence that you've spent the money. From there, and it's worth noting as well that if the property was sold, those exemptions don't transfer over. So if you are buying a house or buying a property with a with an exemption there, then it won't transfer. You will need to reapply for that exemption. So it's just making sure that you have that eyes wide open when you go into it.
And done correctly, this isn't just a sunk cost, it's an investment in your asset.
True.
Right? So you think about properties below an EPCC are 73% more likely to have damp and mold. If I'm spending $5,000 on cavity, wall insulation, loft top up, and a little bit of ventilation measures, I could be spending easily 4 times that on a complex damp remediation program. So really, this is about prophylactic measures that will help landlords avoid cost down the line. And you can also target your investment towards things that will actually appreciate the property value, right? So you think about solar panels demonstrably add to property valuations, demonstrably reduce bills for tenants. You can flow that through to the marketing and to the rent that you're charging. It's about being clever with where you decide to spend that money and how, and really seeing this as an investment in your asset, not just a sunk cost or a compliance matter.
My goodness, I feel so much more positive about EPCs listening to that. That's great.
Ben, it's coming one way or another,
Okay.
so let's use this.
One
right?
last question for you, James. I mean, do you think we should be abandoning the idea of C by 2030 and really looking at D, which would seem to be far more realistic, and looking at C for 2035?
It's a good question. I think that there should be a phased approach, a standard approach. I think that if you were to go for the fabrics first, for example, so the insulations, loft insulations, any kind of cavity loss, wall insulation, things like that, try and get that up as best as you can and have that. If you had a blanket, that's what needed to be done before 2030, and then phase it from there, maybe from smart homes and then solar and some of the greener, warmer initiatives from there. But I think having it as a 2028/2030 for a blanket C is just unachievable and unrealistic.
Let's hope government will be listening to that and might respond positively. Time for some questions we've received earlier from the audience. One here: will spending on upgrades carried out before 2026 count towards the cost cap. We've covered this, haven't we?
It's a big fat no.
It's a big fat no.
It's a big
Is
fat
it?
For now,
For now.
potentially will be reconsidered.
And certainly we're involved in round tables when it comes to these particular matters. And, if you want to encourage the right sort of behaviour, why make people wait until 2026? Why have people hold back if they're going to do these changes? That would be a really good way to say, well, we can take these things into account if you've already done some stuff. And, the difficulty around that, I think, is, there are a certain number of groups who find that an unpalatable option. And we say that that's just a pragmatic option that actually encourages the right sort of behaviour from which renters will benefit.
And it can't just be stick, right?
Right.
And we have big grant funding programs right now. Warm Homes Local Grant that's just been announced, that's targeting the private rental sector and owner occupiers. You want landlords, and government should want landlords to take up that program and invest now.
Yeah, absolutely right. I had is this question, but I had a guy ask me in Liverpool yesterday that he was just on the cusp of a C. He just just made it.
Just one more solar panel.
Yeah. Should he be doing something right now? Should he be sitting tight? Should he be going out and getting it reassessed? What would your advice be?
I would get some time and temperature zone controls, and if he hasn't got LEDs, put those in, a few cheap and cheerful measures like that.
Okay, fine. And where's the best place, to get advice from, aside from, the wonderful NRLA and all of the advice that we give? But there's a lot of things that are expected of landlords at the moment, and we've got the consultation that's going on. Where can we point them in the right sort of direction to get advice? Do you know anyone?
Well, then you should point them towards us at Dom.
Well, there we go.
What I do think is important is get that PAS 2035 retrofit assessment. You can start non-intrusive. We do that. We've got a predictive stock assessment model, 4 billion data points. We're 97% accurate outside in predicting SAP point movement. So you can get a quick sense of, if I am at the margin of EPC D or C, is there something that's going to tip me over, or should I wait? And then I really would encourage people, whether you do it with us or somebody else, get that PAS 2035 retrofit assessment, because the EPC often isn't worth the paper it's printed on. And especially when it comes to damp and mold risk, you want to be confident things have been done properly.
Anna Moore, James Kent, thank you very much for joining us.
Thank you. We spoke earlier about landlords selling up, but it's important to remember that many of us are keen to invest or redevelop our portfolios. As the market changes, we need to change with it. And to explore some of the development challenges and opportunities out there, we are joined by Henry Davis, developer, trainer and writer, and James Donoghue from Landlord Property Exchange. So James, let me start with you first. I want to ask about the market and where you think it's going. How is the market at the moment? I mean, obviously we've just come off this sort of stamp duty cliff edge, haven't we, where stamp duty has now gone back up. What's the market like, do you think?
I think now there's some renewed optimism coming to the market. Generally it does run off sentiment. So you generally get to this time of the year, particularly around spring, the summertime now. Certainly prospective sellers are now looking for a refresh, looking to the market to see where it goes. For certainly investors and prospective sellers as well as buyers, interest rates beginning to decrease now, and inflation also beginning to decrease and come back into certainly around the 2% mark. You start to have more optimism and more focus really for prospective sellers, knowing that now there are prospectively good buyers in the market. And as you just touched on there with the stamp duty, I suppose coming to the end of beginning of April, that certainly now started to factor in and provide more optimism now in the market. So yeah, there's some real good focus, and you can generally see now within our business, certainly engagement, that there are still lots of proactive investors there looking for opportunities and certainly looking to scale and see what potential deals are.
Some interesting drivers, just looking at Savills research, they're saying that some downward pressures on the market, slowing it down potentially, are VAT on school fees, potentially the reduced demand from non-DOMs in prime central London, the additional stamp duty at 5%. they think there's going to be fewer buy-to-let investors, but things that might help are falling interest rates, that there is an improving sentiment, and also properties are a bit cheaper in prime central London relative to others, because prime central London's been a bit depressed for a while.
Yeah.
Do any of those ring true with you?
Well, obviously, the area is very, very much a key, really. And ultimately, when it comes to looking at the prospective purchase of, say, a portfolio or even an investment property, there are so many other factors that an investor needs to take into consideration. Yes, interest rates begin to come down is helpful, because if they are getting at a certain price, it enables them to revalue it at obviously a higher price effectively, and perhaps also increase some of the rents to ensure that the yields actually stack up. So, ultimately, I think the area and where it's defined is always going to help and support. For instance, where we're currently situated now in Salford, Northwest, there is so much focus now within this area. You only have to look just across the way in terms of the future investment within the Old Trafford area and the knock-on effect that's going to have the likes of Greater Manchester. All those other suburbs which are surrounding the likes of the central area of Manchester are really going to start to benefit off the back of that, increased transportation, etc. And that's only going to increase greater focus and I think increased effectively in the valuation of those properties in those suburb areas. And that's where investors, we always see, are looking for those new opportunities. Yeah, always likes of London, perhaps the more centralised areas, the cities now. You would probably say are in quite a quite saturated market, whereas there's more suburbs. Those are the areas now where investors are looking for the key opportunities.
Well, let's talk hotspots, actually, with you, Henry. And in fact, I looked at the Savills predictions for the next 5 years. They think Midlands and the North will go up by around 20% in terms of capital values, and London and the South East more like 14 to 16%. Do you think there are kind of more hotspots in the Midlands and the North than down south?
Well, hotspots, to define a hotspot for me, there's two things. You need lots of inward investment or a story where, like Liverpool was 10 years ago, where there was a story. But one of the best things to look out for is house price to earnings ratios. And in the Northeast, house prices to earnings ratios are really, really low. And what that means on a practical basis is that the local population can afford to effectively use a higher percentage of their disposable income towards paying a mortgage. So that, to me, is why I'll be looking for hotspots, the areas with low house price to earnings ratio, because even if there's no inward investment in those areas, even if there's no story, those house prices will increase because they're simply more affordable to local dynamic populations.
And I was reading in Property Investor News earlier about kind of Wolverhampton redevelopment. There's still redevelopment going on in Birmingham. We've got East-West Rail, which is that corridor from Oxford to Cambridge. Do you think it's sensible to kind of look at those regeneration areas?
Yeah, absolutely, because there's a regeneration story. But me as a more mature investor, property developer, I'm not looking for capital appreciation. I have to make the money in the deal instantly. And if you want to build a sustainable business model as a property investor, you effectively have to become a property developer. Because in each transaction that you make, you have to create value and equity in every deal. In other words, recycle your cash, take everything out. Because if you don't do that, you're a property investor where you invest in a property and you run out of cash. So you have to decide, how can I build a long-term sustainable model in property? And to do that, you will have to buy derelict properties, probably have to turn them into HMOs, because that's the only thing that will give you a cash-flowing assets. And it will also give you a valuation based on the yield, based on a commercial valuation, where you can have enough equity in the deal to take all the money out and then rinse and repeat.
So we've heard about Henry's hotspots.
Yes.
Talk to us about segments. You've kind of addressed HMOs as being
Yes.
a good segment that could flourish. Is there anything else that you would...
Well, I'll give you a tip. A really good one would be the government are starting to clamp down on planning permission for serviced accommodation. So in certain cities in the UK, the local councils are writing to people who have serviced accommodation apartments, and they're saying to them, have you got planning permission? You're not allowed to run this. So what's going to happen is, it's happened all over the world, and it's happened in Spain. There's going to be a big clampdown on serviced accommodation. So one of the big things to get into would be, for example, if you have planning permission for a serviced accommodation property, because in years to come, the nightly rate will dramatically increase, like it did in New York when they did this. That would be one area. Another good one would, of course, be HMOs as well. And HMOs in Article 4 areas where they're banned are really good because the supply has been dampened. But you can actually get planning permission in an Article 4 area really easy if you know which type of property to pick in the exact type of area. For example, if you go for planning permission, you know, a row of terrace houses in a nice affluent area, you're not going to get planning permission in an Article 4 area. But if you were to do, say, an old pub or an office block, or let's say just an old shop or a commercial unit in the middle of a residential area, you have a much better chance of getting planning permission.
So this is about doing your homework, though.
Well, absolutely, yes, and working with planning consultants. And I always say to people, you know, ring your local planning consultant, tell them you're thinking about buying this property, ask for their opinion.
And are they encouraging when you ask those sorts of questions?
Yeah, if they think they're getting the instruction,
Yes.
yeah, they're like, oh yeah, no problem, we'll help you there. But generally speaking, they are as well. And I mean, a lot of people will ring the local planning department. I personally don't do that because obviously it's very bureaucratic, and the chance of getting through to the right person, you know, you could spend the whole day on the phone. And I personally find, from my personal experience, I'm not speaking from the NRLA, right, that sometimes planning departments can be very negative on your planning opportunity, and they can kind of put you off, and they can tell you what you can't do. And then I'll talk to my planning consultant, and he say, you know what, I don't agree with anything you've been advised by. We're going for this, and we're going full steam ahead, and I'm confident that we'll get through it. And many times that's exactly what's happened.
Just to add to that, in terms of the hotspots, a real big focus is tenanted blocks. So in particular those where the titles have been split. So effectively there's a good opportunity there where, you know, we're at the moment overseeing and selling blocks of up to 30 units effectively across the UK. And the real focus and interest from prospective purchasers there is, you know, they're already fully tenanted. They're all effectively on their own ASTs, so now they can actually forecast on that potential revenue over the next few years. The lender now understands as well what the forecast is effectively on that and how that can appreciate over the time. But crucially, being able to actually split the titles and can realise the value on an individual basis. So should they wish to sell those off individually to perhaps the open market, etc., there is potentially more of an upside in terms of the valuation associated to that. And, you know, daily we're speaking to investors who are looking naturally for opportunities, and that pretty much is always number one focus is, have you got any blocks effectively by which we can purchase all tenanted?
Do you have any thoughts, James, on what impacts MEES could have on investor behaviour? That's the energy efficiency changes.
So I think, as we touched on earlier, you know, it's still a big focus within prospective purchasers and what they have to factor in. You know, the minimum of a C is certainly going to be a crucial point for those. You have to really look at some of the types of properties, however, that they're purchasing. So, you know, if you're looking at a portfolio, for instance, of Victorian houses as such, it's going to be a real challenge for them to overcome that. And I think that's naturally where prospective purchasers are still looking for guidance in terms of, you know, how will they overcome some of those kind of, I suppose, needs in order to get them up to those particular ratings? And effectively, will those even become exempt in that respect?
Yes, Henry, you sound like you're an enthusiast on planning changes. I did want to ask you about that. Right. So the planning and infrastructure bill will actually take quite a lot of powers away from councillors and give it to planning officers. Yeah. Do you think there are going to be lots of opportunities in there for developers?
Well, you're going to be surprised by my answer. As a developer, as solely as a developer, right, not representing anybody else's opinion, I don't want an easier planning system because I understand the planning system very well. I know how to get a property through planning. I know how to win a planning application.
You want to keep the secrets to yourself?
So I want to keep it all to myself, right? So that it's only experienced developers who've been doing this for many decades can get through the system, because then there's a massive uplift. But okay, on a general sense, of course, it's much better. It is going to be easier. And there's particular regulation about, you know, the eco side of things where, you know, a site might have not been viable for planning, for example, because there might have been bats on the site. Mm-hmm. So common sense now will prevail where, you know, the council might say, well, okay, you know, the bats might have to move home.
Yes.
because it's a choice between either bats having a home or humans. And they are actually tackling those nuances of the planning system, and they do seem quite intent on changing it. So it is going to be, there's going to be a planning opportunity where sites where previously that were not so viable will suddenly become viable. So based on what I read of the document they've sent out, it looks like there will be a boom in planning. It will be a lot easier. More sites will be viable.
And of course, a lot of this is predicated on lender appetite, isn't it? So, how cautious or expensive is developer lending at the moment?
Well, if you're doing using lending in a development, it's really complex to actually get it through. You get your loan offer from the lender, and as many people know, loan offer is one thing, but actually getting it through the legal side is very complicated. And it's very stressful because often I might have a development where I don't know really for sure if I'm getting that money until the day of drawdown for sure. So it is quite stressful, and it's a difficult model to scale because every site is so individual, and trying to work out the building costs is really difficult. Even if I have lots of QSs and I have lots of in 30 years, I've never once finished one project on time or on budget, right? And I train people how to do this and advise this in the NRLA training courses, which is the key to property investment. So it's really hard, even for somebody with experience. And because of the labour shortage that we mentioned before, we talked about, it's even harder now. And there's a massive supply problem in terms of trades. And I think something like, the percentages that was mentioned previously, it's going to be a crisis in the next 10 years.
And what sort of innovations might we see over the next decade in this area? James, if you want to field that.
Well, yeah, ultimately, LP Exchange is more geared towards a platform which enables, prospective sellers and buyers to sell off market through an innovative platform. And very much we see that market as though it's moving that way. But where we see is collaboration, within innovation. So being able to collaborate with effectively other businesses with whom have their own infrastructure, have their own platforms to integrate, so it can all be in one central place effectively. So I certainly see, as prospective purchasers, investors, going down an innovative solution or platform where it's all integrated, where they don't have to necessarily go to different suppliers simultaneously, shop around. It's all in one particular platform and it's all integrated. And that's ultimately what majority investors that we speak with require and want. They want a very simplistic, effectively journey for them to make decisions based on where they want to invest their money, how they want to invest it, and ensuring that all the other infrastructure sat behind it, i.e. retrofit, lettings, property management, is all within one effectively central platform. And ultimately, that innovation is there, is coming, it's more collaborative, but it just obviously needs to all be brought together effectively.
Well, we have had some advanced questions for the podcast, and there's been a question around construction costs. Maybe for you, Henry, much higher.
Construction costs is the bane of my daily life. Honestly, it's like,
I can believe it.
Dealing with builders, because there's such a shortage in dealing with the way construction works is, if you want a really good builder, he will do everything perfect, but you won't make any money in the project. Yeah. So you're always effectively looking for somebody who's a compromise candidate, who's somebody who can do the job. They're not brilliant, but they're a good enough price so you can make money. So I spend my life interviewing compromise candidates effectively.
Yeah, what I find incredible is that a loft extension used to be 42,000 in London, and now it's 80 or 100. Yeah. I mean, it's incredible.
But it works the other way around. The builders also interview me because they can choose anybody they want. They can get work easily. Mm-hmm. So they're thinking, oh, is he going to be hard work? No thanks.
Are you hard work?
Easy. Oh, I'm such an easy client if I don't say so myself. You know what I mean?
James, will we look back at the last 15 years as a golden age for capital growth, and should we adjust our expectations going forward?
Well, I think you can only see at the moment, lots of landlords are looking to exit, aren't they? So I suppose that would I suppose a high level would push towards people are thinking now's the time to exit. But I do think there's just a changing, shall we, or passing of the baton, really. There are new prospective investors younger, who are able to adapt, perhaps already incorporated their properties within a limited company, which makes it more tax efficient. And now they're seeing, you know, opportunities effectively to I suppose look at the what's in front of them and see where the next 5 to 10 years will go. But ultimately, within the PRS, there's always going to be challenges, yeah. And whether it's a right wing or a left wing government, there will always be challenges to take into consideration. And it's I suppose investors, entrepreneurs effectively with that mindset who are going to be able to adapt and see the new opportunities to come. There are so many new services outside, you know, within the market right now. So many, you know, ways to innovate, which is going to provide, you know, those types of investors even more optimism to go forward. So, yes, the last 15 years, I think where interest rates were certainly as well, lots of people were very much used to lending being incredibly easy to come across effectively, and now things have massively changed. But, you know, ultimately it's all about adapting, and as long as you've got a we're focused on potentially incorporating your assets, essentially, you should be in a good place going forward.
Quick final word from you, Henry. Are you optimistic about capital growth going forward? I mean, surely we're coming to the end of the house price cycle.
Well, capital growth is driven by wage growth, right? And it's driven by mortgage availability, and it's driven by sentiment. And despite all this endless regulation that the government are putting through, it's actually worse in other areas, in Scotland and Wales. In Ireland, they've just devastated the market. All the landlords have left, and the cycle has turned around. The recent Irish government have started to incentivise landlords to get back into the industry. So it's a cycle, and I think we will go through that cycle. But I do worry that the government will push it too far to the point where it's not really viable for landlords. It's too much hassle. And the paperwork requirements, as we all know, as NRLA membership, that is the biggest challenge. Doing all the endless form filling and paperwork that you have to do.
I was trying to end on an optimistic note. Henry Davis, James.
Listen, it's a great business to get into. Everybody, buy tomorrow, go in, get it, get your buy to let. You'll do well.
Absolutely, yes. So look, Henry Davis and James Donoghue, thank you very much for joining us. Well, that's it for this special live edition of Listen Up Landlords at the Digital Performance Lab here in MediaCity Salford.
Do keep in touch with us on social media, and there's plenty more of all of the topics discussed today at nrla.org.uk.
We'd like to say a special thank you to our sponsor tonight, Domna Homes, and thanks to our producer, Sally Walmsley, to you for listening, and to our fabulous audience, good night. Thank you, everyone.